Well, good evening and welcome to the webinar where we take a closer look at the tools behind My Stock Scanner, and especially the new tools, because Liam, we might as well tell we have made a lot of new tools for hopefully that would be to benefit of our members. And as it is on My Stock Scanner, we provide the tools, but you keep the money. Liam, you're one of the two people behind the My Stock Scanner, the website. I know that a lot of members already know that. Your partner, Hans-Henrik Nielsen, has been active in the stock market since 1985. You came a little later into the market, but over the next 45 minutes, you're the man with the answers. And our members have lots of questions. We already received some, but you can go into the chat right now and give us your questions, but you can also email them at fomo@mystockscanner.com. And Liam, let's jump into it because I think that we need to introduce some of the new tools. And I know one of the sort of nucleus of the entire site now is the Explorer. Take us into it. What is the Explorer and how does it work?
Yeah, before we go on, I was just going to get quite upset by this particular comment we just came in, but then quickly saved yourself by that one. That sounds like more of an afterthought, but I'll take the win anyway. It's interesting to be back in doing a live show for a change.
Yeah, I know that you're all confused, but you know how it is. I know that you'll get the rhythm of it as soon as we get going here.
I'm
But
sure.
but there's so many things on the platform, and I'm glad to see that we have lots of members coming by and asking questions already. Somebody even missed your face, Liam. That'll be a first. But let's get into the tools to explore it. Take us to the new website, so to say.
Let's do it. So yeah, we've got quite a few things that we added over the last. It's really a project that's been going on for 2 or 3 months now, and it's a lot of streamlining behind the scenes, a lot getting ready for a number of other projects we've got going on going forward. But the key one that sort of everyone's going to use, and I think for the guys that have been using it for the last few days, and last week or two that we've been up and running with it, if we took it away, you'd think, how the hell do I use the platform? And that is something called the Explorer. And what the Explorer is basically a list of stocks next to the page that you're looking at. So we're still on the home page, but we've got the Explorer here. And what this allows us to do is to navigate, look at the stocks in the particular Explorer. This is a particularly useful one because they're ETFs and we haven't got the ETF data in quite yet, but we can go and see, okay, for this particular stock, let's look at the trading view indicator and let's see how it's done. But it also gives us a list of previously used items that we've seen. So we can see in here, we've got the last theme that we did, and we can see various bits of information about that. We can click on something like, I don't know, ADP or something like that, and it will load up the data directly for us. So it's really a way of navigating around the system that just makes sense, and it's taken a lot from other systems that we've seen. It's taken a lot from systems like TradingView, which most people are pretty familiar with on the platform, which is it makes up part of our platform as well. So it's really there to actually help you just get around the system. What it also does, as well as providing you with lists and the ability to navigate them. So if we just want to find our old lists, we can see that we've got watch lists in a big long list here. We've got our portfolios, which we can now screen on, and we've got themes, which are the latest thematic a list of stocks that we're providing with you guys, and actually seeing how they're doing over time. If we just choose a portfolio, I will go in here and I will choose the 3-point playbook live performance. We're all members here today. There's and trial users, so everyone's got access to this data. So let's see. We can now do things like let's screen and load a screener on the playbook stocks. So if you have a portfolio of stocks, you can now apply screens and sorting to that portfolio, and you can say, okay, let's sort it by the change over the last day. And we can do that automatically. We can see what the different movements are in this particular stock. We can also change the sort by clicking on here. So, and you've got the familiar old modal dialog boxes coming up. If you want to amend the rules, and this screener is actually available to everyone, so you can make a copy. It's the one that I came up with last week, basically saying the quadrant, or we'll come on to the stock map in just a sec, is in 2 particular quadrants. We've got the earnings per share is greater than a year ago. The estimates, I still haven't changed that label. The estimate EPS is greater than the last annual EPS, and the quality score is greater than 60. Those are the rules that we're actually applying to this, and it comes back with 33 stocks that meet those requirements in the 3-point playbook. And we can also just click off the close there. So we can now screen for stocks in a watch list. That allows us to do quite a few things. That allows us to do things like screen for stocks that we need to sell in a portfolio. So on the 3-point playbook, we have alerts on the system, or a screener on the system that says these are ones that just duck below the 50-day or the 200-day moving average, or these are ones where the MTI daily or the weekly have gone into red. So we can just get a very short list. This will grow as we go forward to more of an email alert system as well. So that's where we're going.
That is one of the questions, Liam, that we had, and we'll get to it. That's about exit strategies. And it seems to be one of the big ones because everybody's talking about how we get into the stocks. And we are very focused on that when we get the signals. That could be from the stock map. It could be from the sectors. It could be from many different various reasons that we get a sort of an entrance signal. But we're talking about making a signal or at least a screener that tells us when to get out.
Yeah, exactly. So that's the kind of thing you can do now. You can also do on a watch list. So we pick up a watch list that I've used for a while. It's got an awful lot of stocks in it. In fact, I'm not even sure that is the right one. It's only got 32. Let's just choose it properly. I should have found it before. I have about 250 stocks in this watch list. That's because I'm looking at portfolios. That's the one. There we are. Even helps if you navigate the system properly. So within here, if I just get rid of the screener on here, we've got 291 stocks. So if I just apply the screener that we just had in there, we can see that goes down. So all of the 291 stocks in that watch list are high quality. And if we apply this rule set to it that says only show me the ones with the stock map in a particular quadrant, with the EPS rising with the country score greater than 60, it just gives us 44. So that makes it a hell of a lot easier just to go around the platform and actually find stocks that actually you might be on the cusp of buying.
And the thing is that from here, you could almost dive into it and you can focus on that list on your own. And that you can do by sort of making the small screen a little bit bigger and make it take up the entire screen. So you get them into your own lists, so to say.
Yes, you can. So you can expand it out here, which gives you pretty much what you had before in the old watch list side of things. So let's just get rid of that. I hadn't seen that just now. We've actually got a question which I might as well deal with here while we're dealing with it. We've got, can we show a way of actually searching using Explorer search for swing trades? And also, I think that's Soren, some kind of alert system will be that is coming very soon. This whole process of actually having the screener in place in watch lists and portfolios and any list of stocks actually is the enabler for that. So it's the thing we've been working very hard for. If we just go back very quickly to how do we search for swing trading stocks, and we can see I'll show you the portfolio in a sec that we've added recently, but if we come in here, we can actually add a new rule into the system, or shall we? Actually, that is, I will create a new screener and I will say in here we will search for MTX. So MTX is our new indicator, which we try not to call a swing trading indicator, but it looks for short-term movements, and it stands for the X is explosion. That's what the key is here. So we're looking for stocks that could actually explode upwards. So this is again my 291 strong stock list. We've got 53 stocks with an MTX that is in green there. If I just add another rule, and we will put in the sector map, stock map, sorry, and put in the quadrant, we'll just have it improving and leading. So these are the two key areas that we use to run our new MTX platform. So and portfolio, we can see that we've got a number of stocks here that we're saying are poised to actually potentially explode. So that's how we're looking at using the MTX. And if we just go very quickly into one of our new portfolios that we just released, so we've got two new portfolios as well. We've got the ETF rotation, which I'll go through a little bit later. We've also got our swing trading side of things. So we can see here we've got 12 particular stocks in open positions at the moment. Our average return is 13%. This has been going since the beginning of April. We've actually been working with the indicator ourselves for a good 4 or 5 months now, but it's only now that we've got it on the platform and have actually started testing it in a particular system. So we can see here that if we go into the positions, we've got a number of closed on, only a couple of closed ones at the moment, but everything else is actually still alive and kicking. And if we click into one of these stocks and look at the trading view chart on it.
And talking about the trading view chart, a quick question also that I know a lot of people really are interested in is when in our, because we have a progress line, we have more things to come on our platform. People are talking live here, live data from TradingView. Do you dare give a timeline for that, Liam?
We've got actually again this latest release gives us that powerful platform to move on from there. So we've got a timeline for that is going to be hopefully by the end of August that we're looking at that. It could be sooner than that. It depends on the priority of things. But effectively, the next things we're working on are making the system easy to use, because we've got a lot of new users on the system. A lot of you guys out there who've been using the system for quite a while still don't know the ins and outs of it, and you know, some of the nuances that go on, and some of the options that you've got. So actually making that really, really obvious by things like much better help, much better design of the screens, and actually introducing an AI chatbot into the system that initially will guide you around the system and tell you what you can do and answer questions in the same way that we would, but it will also eventually do things like create your own screeners for you. It will create your own watch lists. It will go away and research things. So that's an area we talked about in the forum before, but that's coming. The other big area that we've got is expanding the use of the stock map. And everyone's got really, really excited by the stock map, and quite rightly too. So because we've been using it for 6 months. I think when we first gave it to Hans-Henrik, he basically spent the whole weekend using it. I don't even think he went to bed because he was. I remember him being so excited about it, and it is actually quite a revolutionary tool. At the moment, you've got to do a lot of the heavy lifting to find all the stocks and put them into a watch list, and then do the stock map on them and see which is moving. What we want to get to this month, so by the end of this month, is the ability for you to say, okay, let's go into, say, Denmark as a country. It's got 9 sectors in it. Some of them are doing particularly well, some of them aren't doing particularly well. Drill down into the ones that are, see the industries that are doing well, drill down into those, see the stocks that are doing really well out of that. So you've got lots and lots of tailwinds coming behind you, and that's where the power of the stock map is. So that's the roadmap for us for the next 2 or 3 months of development coming in there. But live data is definitely there.
It's definitely on the blog, and we'll keep you posted. And hopefully, yeah, we well, the thing is that you are working, you guys. I've never ever worked with people like Hans-Henrik and you, because you are basically almost 24/7. I think most of the members realize that with your ability to answer questions. We would love to receive those questions on email so we can respond to you in due time. We can't do it live all the time, and that's also going to go for a lot of the questions that you're asking right now. I know one. I'll take an easy one from Tina saying, "Can you save this swing trade screener so
Yes, I will.
they can use it?" So
Yeah.
you're going to do that. But Liam, we have so many things that we need to look into. Go back into this one, because also I think that we should do a proper presentation of the stock map as the way that you use it, so people can learn from that.
Yeah. Okay, let's load up a watch list very quickly, and we will look at my watch list. I've got a US sectors one here. So we've got a list of US sectors. So all the US sectors up there, nice and easy. If we look at stock map, this gives us an overview of which stocks, or which stocks in, or ETFs in the stock map are moving. Now we've got 4 quadrants. It looks really complex. It really, really isn't. Basically, anything in the improving or leading is something that we want to pay attention to. Anything in weakening and lagging is something that we're probably not going to touch, or it might be if it's flipped into weakening, then we're looking at it saying, well, okay, that's our first warning sign that we might sell. What these actually mean, so down the bottom here, if I just move my screen down a little bit, you've got relative strength. So you've got a benchmark, which is right in the middle, which in this case, I seem to remember is the RSP. I think that's by default. Yeah, so we've got the equal weighted S&P 500. So that means all the 500 stocks in the S&P 500 equally weighted in the system. So a small company like FedEx is the same size in that index as Nvidia. So everyone has a fair crack at the whip, and it also means that it doesn't have a particular bias to IT and tech companies, which obviously make up something like 46% of the index, of the S&P 500 index generally. So what we can see here, just looking at it, is XLK, which is the tech ETF, has been going from improving into leading for at least from since April the 17th. If I just change this to, go on, Jesper.
Yeah, because somebody's asking how long a tail should you use on when you look at these? How long does it make sense?
The tail length is, it doesn't really matter. The key thing, actually, the two key things here to remember is that it's the positioning of the final dot in the stock map is key, because that tells you whether it's improving, leading, weakening, or lagging. The movement from a particular sector into another is important. So the one thing that we always look for at the moment is that movement coming from lagging into the improving section. And what that means is that compared to the benchmark, it's still not its relative strength is less, so it's still not returning as much. It's not doing as well as a stock, but as a momentum, as a change in price, it's actually got some more momentum behind it than the benchmark. So that's effectively what these mean. If something's over here, it's moving faster than the benchmark and it's got better pricing power than the benchmark. If it's over here, it's the momentum's behind it, but it's not quite got that pricing power yet. And the reverse comes in here. If it's over in the lagging, it's everything, the benchmark is just outweighing it completely. It's outfighting it completely. The weakening means actually it could be going down into the lagging, in which case be really careful. And it may be, as I say, an indicator that we want to come out. What we do often see, these, it's called a rotational chart, because what tends to happen is stocks move around in here. So if we go back, actually go to the settings and put the maximum tail length in, then we can see that stocks go in a circular format around here, generally clockwise, but we have seen ones that sort of move around quite a lot in here. It looks a bit more random. So the tail length is really there to tell us historically, when we look at things, when did it move from, say, into from lagging into the improving side of things. That allows us to go back and back test this. So that's really where the tail length comes in. So I wouldn't worry too much about the tail length. What is important, though, if I just add a couple more ETFs in here, which are specific to the themes that we just come up with recently. So IGV is the software ETF. The backup's running at the moment, and I should have probably put it off, so it's a little bit slow to update, especially when I don't find the right one. This is the FinTech ETF, and we also have JETS.
Yeah, that's the new one. That's our
that's the new
airplanes and travels
this week.
that
So
we're
we'll
at.
talk about themes very quickly before we end up here, but we'll focus on the stock map because that's where everyone's really looking at these things. So effectively you can see the boring old stayed just full of the sector ETFs that just full of lots and lots of stocks are actually concentrated in the center and they don't move around that much, whereas you can see that IGV has actually been moving around quite a lot. And what we call this in English is amplitude. I don't know how that translates into Danish, but the size of the movement is important rather than the actual tail length itself. So what you tend to find here is that the more violent moves, so the more a stock is either down here and moves up and sticks to the outside but goes into improving or leading, that tends to be a greater sign of strength and momentum and just pricing power within that particular group of stocks, list of stocks, or stock itself than anything else. So we're not looking at tail length, we're looking at that sort of big movement around the stock map, and that's why we chose IGV. I mean, this came into the improving side of things on April the 17th. So if we then go into IGV and just have a look at the trading view chart there, we can see April the 17th pretty much. I mean, we were for 2 or 3 days off. So that's not a bad result as we go through this. And it's not a crystal ball. It's often not as good as that. It does show our latest one, Jets. I think Jets started going up mid-April, and it only really showed on the stock map properly, and everywhere else that we look on around the 29th of May. So it's not that quick a lot of the time, but it's really, really strong indicator of some strength behind it. And as I say, the key that we're looking to do is actually give you the ability to come in, look at sectors, and say, okay, I like IGV, the software sector. Drill down into that, look at the stocks or the industries underneath that, and work out what's moving underneath that. And this is really going back to research that Hans and I have been reading for donkey's years now, that actually around 60 to 80% of the stock's movement is often based on either its index, its sector, or its industry. So if you've got those tailwinds behind you, you're only trying to find the last 20 or 30% reasons why you should buy into these stocks, because actually you've got all of that sort of momentum behind you from the big guys.
Lots of questions coming in. That's great.
Yep.
That's fantastic, both on email and in the chat here. I have two. The one we're not going to drill that into, but Klaus wants to know how the stock map momentum and relativity strength is calculated. There's something that's proprietary to us that that's our rights, and we're not going to tell everything.
Yeah.
Can you tell a little bit about it?
It's basically, it's not actually that complex to go through. It is literally looking at a calculation of momentum going through the system, and we have our own sort of ways of calculating momentum, which is sort of based on the momentum score within the system. So we use that particular one. It's not that far off from sort of the bog standard momentum areas. You'll see it's just a little bit quicker some of the time, and relative strength is really what you see. It's the price over the benchmark as a percentage. So this stuff isn't difficult to do. Is actually how we apply it to our universe of stocks, which is where we see the powerful bit coming in, and having all that information, and as I say, being able to drill down and see these things is the key one. We got another question on benchmark.
Exactly.
Looking at which benchmark to use. We would suggest the RSP or something fairly broad, maybe the stock 600, something like that, as an ETF. They're pretty good. I would advise equal weighting, because that doesn't give you a tech bias or any other bias in there. So going for something that actually utilities are equally weighted towards the index compared to everything else would be a good thing as well, I would suggest.
And Liam, we're really getting it's great that people ask in all different directions. Fantastic. We're trying to sort of narrow it down. And I will say right away that we're going to do more of these Q&As for members. It's probably maybe be a bi-monthly, if not monthly occurrence, where you can get to ask your questions. But if you go back to the stock map that you just had, because the thing is, the stock map basically, it's not like we have given up on the 3-point playbook. We're still using all the tools that we have in our toolbox. So that means that we drill down slowly but surely, and that's why also we will wait in that sense, that wait to see the movement in the stock map is confirmed, or that it's alive, so to say, before we do anything.
And we can screen on that as well. So if we look here, I'll give you one really easy answer. For some reason, I've mixed up the themes together in one area. I'll look into that tomorrow. So we've got 84 stocks in here. We've got 84 stocks. So this is something that I looked at earlier on and thought, wow, actually, no, that is really good. So we've got a lot of green in there, but quite a lot of red as well. So there's a lot of stocks. If we load up the screener that I loaded before, which is the quality, that's the one I came up with last week and just gave out to everyone, which basically gives us companies within stock map, high quality score. All of these are pretty high quality anyway, and also earnings per share growing. we can actually see that out of the 84 stocks that we had, well, a third of which or more we're actually losing, or lost money yesterday. We can see that out of the list, it would come up with 28, and only 2 of them are in the red. So that is sort of the power of putting the stock map and a lot of this stuff together. Yeah, just earnings going up and things like that. So the quality companies is actually, you tend to get better stocks out of it. When we do that, we then look in one of these companies. Let's choose Oracle, because we all know Oracle. So if you're following the 3-point playbook portfolio, then we've had it in our portfolio for what, 4 weeks, 6 weeks, I think. Can't remember what we're up. We went up 10% anyway. I saw that yesterday on my portfolio. What we can see, what we dragged out here is we've got. Is it a quality company? We've now got these cards, just a quick one that you can click on to see what it actually means behind the scenes. That's been asked a lot. But if we just come down, we've actually got a new section down here, which actually gives us a green or red interface to say, is it in the right quadrant of the stock map? Is the MTX okay? Is the MTI weekly and daily okay? Is it above the SMA 50 and 200? So we've got it to a state where it's nice and easy to actually see visually what these things are doing. And as well, obviously, you can screen on these, because all of these elements are actually screenable on this with the screener system. And we've also got it in the summary just down here. It's leading. The MTX is green. So that's that.
And again, it goes, so the new tools that come in, we integrate them into the old tools, the 3-point playbook, as we just showed here. And that's super important for us, so that the system gets easier and easier to use, basically.
Yeah, no, and this is the key thing. The direction that we're moving from a tech point of view is to actually really use the name My Stock Scanner, and actually it's going to be it's already a good place to find stocks and find information on stocks. It's going to be pretty much the place you go to find stocks, because these tools are things that actually I can't actually invest without these anymore. Because actually, within a few days, the stock map is just something that you can't walk away from. In the same way, the value chart. Just looking at the value chart and seeing, is this cheap? Is this expensive? Is the sort of thing you train yourself into actually that at a glance. No, I'm not going to go near that at the moment because it's way too expensive. Why would I touch that?
Since we're in the 3-point playbook, there is somebody asking, when and why do you not go with what the system suggests for PE?
That's going to be a moving target as well, because actually I've got an AI as we speak running computations to work out an algorithm to actually place these correctly. I've just given it 200-300 of my own pieces of data for where I place these things. But for now, if we look at Oracle and just take the defaults, so that's what that button does. It just resets everything. So it looks like a very, very different picture to what I had just now, because effectively the bear case is only minus 4.6 and the bull case is up to 16%. Now, what I had was I had the stock map down here, because basically I look at that chart and think, well, actually this, the Oracle was only down at 143 a couple of weeks ago. It was slightly lower than that in February. So that's 2 or 3 months away. Why wouldn't it go down to? What's my argument for saying it would not achieve those lows again? And I haven't got one. So actually, my worst case scenario has got to be something happens in Iran, something happens in China and Taiwan, whatever, hits the industry and it knocks all the stocks down by, in this case, it'll be 35% or so. So that would be why I move these things. If you look at, then I would replace these, probably put it close to where the analysts are at the moment, and probably Oracle's a difficult one. I doubt if it's going to get back to these levels, but it could well get up to somewhere around here. It's already at sort of this peak here right now. So if it goes up, then we've got another 26% or so to carry on. So that is what I look for when I'm looking for value charts. Is really the first thing I do is always look at my downside risk, because that's the thing that's going to tell me whether I've got the stomach to actually sit in this trade and get in it, and whether the risk is too great. And for me, if you're looking to come into Oracle now, you would look at that and think the risk is 35% down for a 26% gain. That's not something we're particularly interested in. We'd go for something that's a lot nicer and tipped in the other direction.
And also, this gives you an indication of when to leave the stock, in that sense that you have said that if I have a bottom that's fairly like that, I don't want to get down to that. And that leads to the next question. We received an email in regards to they love the tool for entering. You were talking a little bit about making a tool for exiting as well, whether we call it stop loss or take your profit or whatever we call it. Um, is it possible to do that? And is it on the charts of what we're going to do?
Yeah, it is. The reason we haven't done it to date is that exits are almost a much more personal thing to do than the entries, because the entries, yeah, sometimes we're late because of various different things. You know, it's below the relevant averages, or the MTI daily hasn't gone green yet, or something like that. The exits, people have lots of different strategies on. So some people, we're in Oracle now. We're up, I don't know, 20%, 25%, something like that. Say if we take a Micron, might be another example. We've just doubled our money in that, so we're up 102, 103%. Some people will look at it and say, do we take some off the top there? Do we, actually say we'll take some profits off there? We'll reduce our position by 50%. We're gambling with the house's money then. So that's one way of looking at an exit and preparing for an exit. Now that's something that you can do based on a valuation chart that looks something like this, because we're actually going ballistic quite early. So the market is now starting to price in next year's numbers rather than this year's numbers. And that always happens when you get to this point. So some people will look at it and say, actually, I'm quite risk averse. The downside here is going down 18.5% or so. I'll take some of my money off the table. The value chart sort of tells us when you need to start thinking about this sort of thing. So this is, I wouldn't trade off the value chart, because there is no, if you look at something like Palantir or even Micron here, we would have said back here in December, the last time we were in, and the last time we made 70%, 80%, it probably won't do that again. But we would have been, well, we were completely wrong when we said that, because it went sort of parabolic again. But it's really there for the danger signals. The same with the stock map position with Micron. The current position for the stock map is, it's in leading still. But if that started going down to weakening, it wouldn't force us to sell, because there's no reason why it couldn't just be having a bit of a lull, a bit of a sideways movement for a while, and then carrying straight on again. So, but what we do is we'd have it on our warning list to say these are things that we need to be really aware of, and we need to have a bit more of a trigger finger on the button to sell on here, because if this starts coming down, what we don't want to do is lose a lot of the gains that we've made. What we are doing more and more, just to show you, is using something called the super trend. Which is, I think it was originally for Forex trades. That was where sort of I first came across it anyway. But it basically gives you what's called a true range stop on these things, which is sometimes quicker than the SMA. Here, the SMA 50 and the SMA 200. So for us to close out Micron normally, we would have to lose almost 45%. So that would be really painful. But what we often do is we look at these true range. So it's basically looking back. In this case, it's looking at the last 10 days, working out what the average range for the stock is, and putting a line underneath it to say, if it breaks that line and goes red, as you can see here, then actually that's possibly time to sell. So it's just another tool that we're starting to use a bit more. Hans and I have used the super trend for years for various different things. We've tried to test it out on various different strategies, but we've actually found that it's a good addition in here, because it can be quicker moving than the SMA 50.
Since we're talking quicker movements, somebody brought up this stock, Sandisk, and basically I know now it gets very specific, Liam, because somebody asked, is there anything more to get in a stock that have jumped so dramatically? It even outperformed Micron.
It has. For those of you who don't know it, it's a tech stock. Um, it's on the other side from Micron. So Micron do the memory modules that go into PCs, and more recently these days into AI. The SanDisk produce materials and a memory for NAND flash technology. So that's SSDs. That's inside your phone. That's those sort of things. So what's happening is AI has been such a drain on on people producing hard disks and also memory chips. The reason for the parabolic moves that we've seen is because supply and demand. There's not enough supply to meet the huge demand that's coming out, and the same goes for SSDs and flash drives in here, because everyone needs more storage closer to the AI data centers so that they can actually put more data into the AI, and that's where we're going. So everything's sort of gearing up for that. So SanDisk are up stupendous amounts, aren't they? It's like 3,000% or something like that. 1,800. They're probably up further than that because I'm quite loaded down there. So yeah, so they have gone parabolic. You can see it. Is there room to go up? We were talking about this earlier with a couple of other members, and you can see it's gone up here in the value chart. I mean, they're not making any money, which is a big downside for us, but it'll qualify for the swing trading portfolio that we've got. We can see here that actually at the moment, if it was to go down to just the level it was at the 31st of December, then that would be a big problem because it's 66% down. But actually, if we're looking forward and we hold to next year, the worst case scenario is a 1.7% return if these numbers are right, and it could still double or treble, in fact, in this case. So my answer would be absolutely. There's no reason why you wouldn't go into it. As I say, the thing that keeps us out of it from a playbook point of view is these numbers here. They're due to make some money, but they haven't made it historically out here. So, or not for a few years anyway. So that's what I'd be slightly worried about from a pure technical and trading point of view. There's no reason why we got an MTX buy here. So these green lines on here are our MTX indicator. So we got a green here, we got one here, we got one here. So we're getting them all the time on this. So there's absolutely no reason why it would not carry on in that trend.
Liam, a question also received an email in regards to our portfolio for this year compared to last year. This year, we have been sitting on the sideline with a bunch of cash because we were uncertain on the market. What is the expectations in regards to when you look at what we are comparing with the market in general, whether it be the S&P 500 and stuff like that, the performance?
Yeah, it's frustrating to not be part of that movement. But the real thing that we're Hans and I focus on when we look at these stocks is low volatility, and by volatility we mean we're half the market. So volatility, you can see here on the grey line, it's actually gone down. One thing, it went down 25-30% last year in April. It's come back up again. It went down again, and it shot straight up. So that is volatility. It's basically that line that goes up and down. That's basically it's like a roller coaster ride. We like a much smoother line. So our downtrend was 7% or drawdown 7.4%. I think was the maximum we achieved that this year. So that happened then. What we missed out on, was the tech rally coming through, and it was partly because it was so quick and so violent that when you read the financial press, there's a lot of fund managers that missed it as well. But it's also, you look at the macroeconomic environment, which we talk about a lot, and Hans does his market scan, and it's the sort of thing that I think everyone's scratching their heads, and we're scratching our heads as well, saying, how is the market levitating quite this high? So that's what really kept us out in April. But then, as it became more apparent during April that the sky wasn't going to fall and war wasn't going to break out, that's going to affect everyone out there, then it became obvious that we should jump in, and that's why we jumped into stocks like TSM, Nvidia. We had IFX in that time, which is up 63. It's up another 10% today, I think. Microsoft, Oracle. So we jumped into those stocks in late April.
And we're not the only one. There's a lot of hedge funds managers who have received phone calls from their clients and kind of going, why are you on the sideline when the market's exploding?
Yeah, and that's it. And the thing is, we're here to preserve capital. I mean, we invest in these portfolios ourselves. So, what we don't want to do is jump on a momentum trend and for it to fail 2 weeks later because suddenly there's no oil coming from Straits of Hormuz, or we haven't got enough helium to make the chips that go into AI that's been driving this massive trend. So those are the sort of things. That's why we keep an eye on the macro trend out there to really see what are the headwinds coming in and where do we need to pivot to, either into safety, which could be cash, could be bonds, could be whatever, or is there more to come and we need to load up. So at the moment, we're looking at loading up more and more stocks coming into the 3-point playbook portfolio. We're currently 63% invested, something like that, 68% invested. And so we're looking at getting closer to the 100% there, because at the moment, it just seems that the market can't go down.
And talking about the market can't go down, we have a webinar coming up next week. As a matter of fact, we have two webinars, one in Danish, one in English. Again,
Yep.
we're going to do a SpaceX webinar, and we also have questions about that, because everybody knows that Hans-Henrik, because he proclaims it in our group often, that he will never, ever buy anything that Elon Musk has ever touched or thought about. No, I'm going a little out there, but we normally stay away from IPOs, and we're looking at an IPO. I saw the latest number. If I look up at my screen right now, it's because now they're talking 1.75 trillion valuation. This is a two-question thing came in an email. Where is that money coming from? Is that going out of other stocks? Is it new money going into the market? And then the big question: should I buy from a member?
Where's the money coming from? That's the concern. Is it's being reallocated from other holdings? So SpaceX, I mean, Hans has made sort of our joint views quite sort of open out there in saying it could easily double, but it's the biggest shit show that we've seen since the last shit show that Elon Musk came up with, to be honest. So the money is effective. So what they've done is they've convinced the Nasdaq and to break their rules effectively, or manipulate them slightly, bend them slightly, to allow the company into the stock exchange, or into the Nasdaq 100 index, which normally you have to be trading for a certain amount of time, and so on and so forth. So they've done that, and that means it gets included in the Nasdaq 100 index. Immediately, ETF trackers will have to sell some of their holdings, because this will be a giant company that takes up an awful lot of the index. You've also got Anthropic coming through. They've just filed yesterday. They filed confidentially, but everyone knows about it. I don't know how that works. And you've also got OpenAI coming out at some stage. I'd imagine they'd either wait strategically a little while now, or they may try and jump the bandwagon sort of immediately. But these companies are looking to bring in somewhere around $4 trillion worth of value, a market capitalization, into the indexes. That will push other companies out. It will reduce the shares of other companies, so they will be sold. So we're worried about that as one of these headwinds that we look at from a macroeconomic point of view, as to what does that do to a company like Microsoft, to Nvidia, because it will reduce down their share, and it could be that they reduce down and we go to safety a little bit in the next few weeks, because these things are happening. As to whether you should buy, it could easily double. I mean, the one thing Elon Musk is he's a magician. He can levitate a stock for years, which has got very low intrinsic value in it, or not make any money. When you look at SpaceX, I think Hans has gone through that a number of times. When you look at SpaceX, it's basically, the valuation is based on AI. Grok and XAI are pretty much the worst of the frontier models out there. They haven't got the traction. They're trying to force the banks that are participating in this to use their AI, and they're pretty much refusing. But they're saying, if you want to be in on this deal, you need to be using our AI. And so, it's, as we say, it could double. We will just look from the sidelines. I think we don't tend to get involved in IPOs because there's no real history behind a lot of these stocks from a trading perspective. We don't know how the price moves. We don't know how people invest in these things. So until we see those patterns, actually, we'd rather sit on the sidelines, like we did with Palantir and lost out on 200% or something.
But again, as you always say, there's about 70,000 stocks that we basically have in our system. So there's plenty to look at. And the stock map, 3-point playbook, everything is made to make it easier to find. And when we combine them, it has become easier to find in the Explorer. The thing is with this webinar, now we're coming up on the 45 minutes, Liam, is that, as I said in the beginning, we're going to do more of these. So in that sense, that when you ask questions to Liam and Hans-Henrik on our platform or on Facebook, we might pull those questions together if we don't answer them right away and take them to these webinars, and we will make the answers available. You can see the webinars later. Liam, again, if we quickly sum up and look forward to what's coming in the coming months, we're going to be active all summer. Market never sleeps, and neither do Hans-Henrik and you, apparently.
We do tend to get up early, I suppose. Trash everything. The stock map. So we've already talked about the plans for the stock map. So making that bigger, easier to actually just identify what stocks are going well, and so on. So that's going to be a big part of what we do for the next month or so. Also including ETFs, so that we have the component parts of the ETFs, so the stocks that are within the ETFs, and some more information like the percentages that are in different countries, different types of equities, so whether into bonds or whatever. We'll also be expanding our themes, and the themes have done pretty well so far. Jets, we'll be interested to see how they perform, but software stocks, I don't know if everyone's seen those yet, but we basically produce a theme a week, and we highlight, okay, in this case it's software stocks. We split them into different segments. You can see all the stocks down here, or you can just see how the individual segments are doing on the system there. This will be something that we expand out, because it's a treasure trove of information. And what we're doing is we are finding some absolutely gems of stocks in here based on the stock map. So effectively, we're looking at something like IGV in the ETF stock map that we've got and saying, well, actually, that's just flipped into improving. So that's something we'll look at. Let's pull that out as a theme. All of those stocks will have that improving tailwind behind them. Let's see what stocks are good and see what stocks aren't particularly good. So IGV, I think, is up 14% in the last week. So it's not done badly, and fintech is up 6%, 7%.
Quick question on email. Can we suggest, as a member asking, can we suggest themes for you guys?
Yeah,
okay,
absolutely. So
just
come
like
in and do
always.
what we will do, because what we want to do is be able to show off in 6 to 8 weeks and say, actually, look how good the stock map is, because because we chose it based on sort of these fundamental pillars that we have as selecting stocks and selecting sort of sectors that we look at. So if you do suggest a theme, we may wait until it hits the right point in the stock map, because it's got to be investable and it's got to be something that we go into now. We've also got one quick question from Lord Baron.
Soren, I think.
Yeah, Soren. Moving forward, how do you see your plans for YouTube videos, shows, and so on and so forth? We're aiming to do at least 2 webinars a month going forward. I think we'll probably end up doing 3 with a roundup of themes generally. We'll do a member-specific one, just like we have tonight, and we'll also do a more generic open one for beginners to come in and actually see how we do things and learn our techniques. So we've got at least that. YouTube videos going forward. Hans has started doing a lot more because he's got a lot more time. So we've kept him occupied with that. It's like a toddler sitting in the corner just playing with things while we do the real work. And so we'll do that. And that's where after that we'll just see where it goes and see where this takes us.
Yeah, and let me just repeat, next week on the 10th and the 11th in English and in Danish, we're warming up to the big IPO. So we will have a SpaceX webinar, but we'll also have sort of a space theme in that general perspective.
Yeah, we've already
So
pulled the numbers together and the stocks together. So
so
there's
that's
a lot of crappy stocks in
there's a lot of risky ones. Let's just say that it's basically like the rocket that blew up on the platform the other day. So yeah, you can take your chances, but you might lose it all. It's a bit of roulette play. And talking about Hans-Henrik, he will be on tomorrow, 7 o'clock tomorrow night. We will do a Danish version of this. Some of it is, of course, a little bit repetitious because we want to make sure that we introduce our new tools so you can get to use them. But do ask more questions. Have you been part of the show tonight and have you asked your question tonight and have more? Show up again tomorrow. Ask Hans-Henrik. He'll probably give the same answer, especially on the SpaceX IPO. That's for sure. And then again, I want to repeat. I know it's a little bit old school, but do send us emails at fomo@mystockscanner.com. It makes us better at sort of coming towards you with your needs for the platforms and stuff like that. If there's anything that you want to suggest, then just write us. Liam, we could go on for hours, but we promised to keep it within 45 and 50 minutes. 5 seconds, that's 50 minutes. We clocked that one, didn't we?
Yep. Yeah, we do.
Yeah, it
Well, you got
is.
Hans tomorrow. He's far more difficult to keep control of. So
Oh no! Now you're just challenging him. Now he's gonna end on the second. But Liam, always a pleasure to see you here. We will see you next week for sure with the SpaceX webinar next week in English, and then Hans-Henrik and I will be on tomorrow 7 o'clock. Once again, thank you for joining us. Thank you for your questions, and thank you for all your kind words in regards to the new tools. We look forward to provide you even more in the future. You guys have a good night. See you around, Liam.